Hey there, and welcome back to the Deep Dive. Today we're diving into something pretty fascinating. Survivorship life insurance. Now, you've probably heard of life insurance, right? But what happens when you've got two lives intertwined in a single policy? That's what we're here to uncover today. We'll be exploring SIUL and SUL, those two types of survivorship policies, and let me tell you, there are some surprising benefits, especially for those of you thinking about your legacy. And joining me today to help break it all down is our resident expert.
Glad to be here. Survivorship life insurance. It's a really interesting topic, and I'm excited to dive into it with you.
So let's just jump right in. Imagine you and your partner are thinking about the future, wanting to make sure you're both protected. Traditional life insurance, it usually just covers one person at a time, right?
Exactly, and that's where these SIUL and SUL policies come in. They're basically like life insurance, but for a pair, usually spouses. The big difference is that the death benefit, it's not paid out until after both insured people are gone. It's not about individual payouts. It's more about what happens after both lives have been lived. Okay, yeah, that makes sense. It's like you're setting up the safety net for after both of you are gone. But what about the benefits of this kind of setup? I mean, there's got to be some advantages to insuring two lives under a single policy, right?
Oh, absolutely. One of the biggest perks is the cost. Just think about it. Insuring two people under one policy is often way cheaper than getting two separate plans. Plus, since the payout happens later, after the second death, it allows couples to get coverage, even if one person might have some health issues that might make those individual policies difficult to get.
No, that's a huge advantage, right? It really helps level the playing field for couples who might not both qualify for coverage on their own, so it's more affordable, more accessible. But what about the death benefit itself? I mean, we talked about when it's paid out, but how can it actually be used?
Well, the death benefit is surprisingly flexible. One of the big ways it's used is in estate planning, especially for families with a lot of assets. Think of it this way. The death benefit can actually help cover those estate taxes, which means the kids won't be forced to sell off the family business or properties just to pay the government.
Now, that is a huge relief, right? It's like you're preserving your legacy both financially and emotionally.
Exactly. It's about making sure everything you've worked so hard for gets passed on without any unnecessary complications or burdens.
It's amazing how powerful these policies can be, and we're just scratching the surface here. Let's dive a little deeper and look at the specifics of both SIUL and SUL. All right, so we're really getting into it now, talking about the ins and outs of SUL and SUL. We've covered the basics of survivorship life insurance, but what actually makes these two types different? Like, what are we really looking at here?
You're right. Let's break down those acronyms. So SUL stands for Survivorship Universal Life. Think of it as like the reliable one. It gives you that lifetime coverage, you've got flexibility with your premium payments, and it has this really interesting feature, a cash value component. And get this, that cash value, it grows over time.
Okay, cash value. That sounds like something you want to have, right? It's not just about that final payout, is it?
Not at all. Think of it like this. It's like having a little savings account built right into your policy. And here's the kicker. You can actually use that cash value while you're still living. Need a loan? Have an unexpected expense? You can tap into those funds.
Wow, so it's like this financial safety net, something you can access if things get a little rocky. I like it.
Exactly. It's about building wealth and preparing for anything. You're not just securing your legacy down the line, you're also creating opportunities for yourself right now.
I'm starting to see why people find this so fascinating. But okay, let's talk about SIUL for a second. I've heard this one is, well, a little more adventurous, you know?
Yeah, that's a great way to put it. SIUL stands for Survivorship Index Universal Life, and it's definitely got that exciting edge. It's similar to SUL with the lifetime coverage and flexible premiums, but here's the exciting part, the cash value growth. It's actually linked to a stock market index, think the S&P 500.
Wait, hold on a minute. Are you saying we're talking about investing in the stock market through your insurance policy?
You got it. With SIUL, you have the chance to earn some seriously impressive returns on that cash value, all based on how well the market performs. Now, I know what you're thinking.
Yeah.
What about market crashes? Well, there's a safety net built right in. SIUL actually has something called a floor, which protects you from any major losses if the market takes a dip.
So you get the potential for big gains, but with a safety net to keep you from losing big. Okay, that sounds like the best of both worlds to me.
You said it. It's about finding that perfect balance between maximizing growth while also minimizing risk. And just like SUL, you have access to that cash value through loans or withdrawals. We're talking about real financial freedom here.
Okay, so we've talked about SIUL, we talked about SUL. They definitely sound great in theory, but how does this all play out in the real world? Let's get specific. What are some real-life situations where someone might benefit from this type of policy? All right, so let's talk real-world examples. We've touched on estate planning, but let's get down to brass tacks. Imagine a family-owned business, maybe it's, I don't know, a bakery that's been around for generations. How could a policy like this help them out?
Perfect example. Let's say the owners of this bakery, let's call them the cake masters, want to keep the business and the family right, but they also want to make sure their kids are taken care of financially. A survivorship policy can actually help them do both. Think about it. When both of those cake masters pass away, that death benefit from the policy can be used to cover those estate taxes. And that means the kids don't have to make this impossible choice between selling the bakery to pay the taxes or taking on a mountain of debt. They get to keep the business and have that financial security.
Wow, that's incredible. That bakery, it gets to keep running, fill the world with delicious cakes for years to come. What a legacy.
Exactly. And it's not just about keeping the lights on, right? Think about those families who they really want to make a difference, leave a legacy of giving back.
You mean like charitable donations? How does that work with the survivorship policy?
A lot of couples, they're really passionate about causes they care about. Maybe it's funding medical research, supporting the arts, whatever it is. They can actually name their favorite charity as the beneficiary on the policy. So after they're gone, that charity, it receives this incredibly generous donation. Their generosity lives on, making a real impact on the world.
It's like their generosity is amplified. It keeps on giving even after they're gone. That's beautiful. But what about families with, well, more unique needs? Like, let's say parents of a child with disabilities who might be worried about their child's care, long term.
Absolutely, and that's where these policies can really provide some serious peace of mind. Those parents, they can use a survivorship policy to create a safety net for their child, a financial one. That death benefit can be used to fund a trust, making sure that their loved one has everything they need, the care, the resources, long after the parents aren't around to provide it themselves.
It's about ensuring their child's well-being, their future, no matter what. We've covered so much ground here today. It's clear these policies, they can be powerful tools. But before we wrap up, what are some key things you really want our listeners to walk away with here? Like, what's the most important advice?
I think the biggest takeaway is this. Knowledge is power. The more you understand these policies, how they can be personalized for you, for your family's needs, that's where the magic happens. Don't be afraid to ask the questions. Talk to a financial advisor, an insurance specialist. Explore all the options. This is about you, your future, your family, your legacy. Make it count.
Absolutely. It's about having all the information you need to make those informed decisions for yourself, for your family. And for anyone listening who wants to learn more about survivorship life insurance, you can reach out to Helen Howe. She's an insurance specialist who can help you navigate all of this. You can give her a call at 408-909-5865. And remember, the deep dive is here each week to help guide you through these complex topics. Make sure you join us next time when we'll be unpacking another fascinating subject. Until then, keep exploring, keep asking those questions, and keep on diving deep.